Good morning. Good morning, everybody. Happy Thursday. And if it's Thursday in my world of Facebook Live, it means we're going to talk about the new normal. The new normal is where our real estate and mortgage heading in the future. And each week on Thursday, we talk about all sorts of topics about what change might be coming and how do we prepare for change and how do we thrive in the land of the new normal. Before I get to my topic today, I want to remind you as we finish out August, it's going to be a different painting every day. Every day I'm here in Scottsdale, and you guys can rate it. Remember, this started from the angry owl, and then we moved to the frivolous bear, and then we went on to the flirtatious donkey, and so forth. This is actually one of the few photographs that we have as art, and I don't remember the artist's name. Belinda has become friends with her. She's a terrific artist, doing both paintings and photographs. Her photographs are in museums across the Southwest, but we appreciate it. I forget her name. I'm so sorry about that. So I'm back here in Scottsdale. I'm ready for bear for the new normal. And my topic, if you saw, was dual licensing. But let me first frame this conversation. One of the topics is very present in various real estate conferences that I go to, like at the Housing Gathering or Inman's Connect. One of the topics bubbling up or one of the concepts or concerns are that, and this is my words, traditional real estate brokerages, right? Brokerages really have no path to profitability. They're just losing a ton of money. And it makes sense. If you pay your agents 90% of the commission, it's harder then to pay all the bills and make money as a brokerage. I'm not saying as a national company, but if you're a Coldwell Banker, Century 21, you're Keller Williams as a broker, local broker, there's virtually no roadmap to profitability. And that's true for most real estate companies. There's no path to profitability. And so these owners are desperate to figure out how to change their model to make money. And as I hear the different leaders talk about what their strategy is and what their plan is, what you often hear is, monetizing verticals. And, when it starts first, you hear a broker owner talk, the first thing they're going to do is monetize the agent. And here's how they're going to monetize the agent. They're going to rent them real estate space, rent them an office. Now they have to figure out how to do it at, positive revenue because they haven't figured that out. But so rent office, offer transaction coordinator, offer coaching, offer marketing packages. All these are at for profit. So it's not, hey, we're going to break even. We're going to make money off of renting you space. We're going to make money off of our coaching. We're going to make money off of our transaction coordinator. We're going to make money off the marketing, tools that we sell you. Maybe we just buy a ton of marketing space and then, we buy it cheap, sell it to you more expensive, whatever. They're trying to figure out how to make money on their agents. So that's one way they're trying to do it. And by the way, which I'm going to talk about extensively, by the way, also they're talking about generating leads, creating their own lead funnels, just like a Zillow, creating leads to the brokerage that they then give to their agents and then co-broker to them. This makes their agents stickier to them and they get a split the commission. So that's another thing that forward-looking real estate brokerages are working on, and they're going to become lead generators. Really interesting. But then they go, well, gosh, there's I don't know, 4 or 5 dozen other verticals they can monetize, and the first one they always look at is mortgage. Okay, mortgage is easy. Let's add mortgage, and of course they go title insurance, escrow, homeowners insurance, home warranty. The list goes on the things that they think that they can monetize. Right, and so because their model is not succeeding, it is not viable. They have to change, and so what they're going to do is we're just going to monetize everything. And what are they saying when they say they're going to monetize verticals? What is that really an expression of? What it means is the person closest to the consumer can monetize the relationship. That's what that means in a simple way. Real estate companies are saying, look, we're the closest one to the home buyer, and the home buyer is going to trust us the most, us and our real estate agent representative. And because we have the primary relationship, we can monetize all downstream opportunities, right? And it kind of makes sense, right? Because here's the fact. The person that has the strongest relationship with the consumer is the one that gets to monetize that relationship. right? The rest of us are just servants to the person with the relationship. And the reason why I bring this up is just like real estate brokerages are going, how do I get top of the funnel? How do I create those lead opportunities so that I can sell them to my own real estate agents, right? But the bigger question is all those players that these real estate companies want to monetize, don't you think they can do the same thing? Can't a mortgage company then go, hey, I'm not going to sit on the back of the bus to a real estate company who's going to dictate my terms and my income. I'll just build my own funnel. I'll be better at getting to the consumer than the real estate company. And can't an insurance company do that? Or can't everyone they're trying to monetize do that same thing? Probably so. And so as margins, just absolutely get squeezed across all types of industries in real estate, as they get squeezed, and as there's not enough volume, isn't it a race right now? The race is who can get to the consumer, and so if you're asking me about the new normal, about the future, the company that wins in the future is the one that gets to the consumer first. That's the one that wins, period. So that's the one that wins. It's very simple, and I cannot wait. Maybe I'll do next week's new normal on just consumer direct strategies, which doesn't mean a call center, but how do you get in front of the consumer first? How do you get the primary relationship so you get the greatest reward? But that's what we're all trying to do, and real estate companies are really trying to do that now. So and I'll save a conversation with consumer direct, which I haven't talked about yet, which is one of my favorite topics. I'll save it maybe for next week. So now we come up to the NAR settlement, the August 17th date, and all the predictions of doom, and some of it's going to be, Mike Ferry or Tom Ferry was right when he was on Dave Savage's podcast a week ago. There's going to be a lot of really big winners, and there's going to be a lot of losers. Just the case, right? But one of the things you may not think is if in fact the buyer side commissions drop by half a percent or 1.5%, whatever they go to. Let's say they were at 2.62 and now they're at 2.55, and let's say they're going to go under 2 or whatever the number is. One of the things that we may not be paying attention to, that's also actually revenue that the real estate brokerage is not going to get, because they get a percentage of the realtor's commission. And if the realtor's commission shrinks, so does their revenue. So one of the things these different real estate companies have to brace for is the financial impact of smaller commissions, because they'll have smaller cuts, right? Really, really, really interesting part here. So that's out there swirling around too. And, I thought, this is a total tangent, sorry. I thought Mike Ferry was great on Dave Savage's podcast. I thought it was one of the better podcasts of the year. And I'm a huge Tom Ferry fan, so understand that, because I'm going to give a bit of criticism right here. He said one of the dumbest things I probably heard him say on that podcast. And it was just a passing comment where he said mortgages are like air. And what he implied is anybody can get a mortgage, push button, get a mortgage. It doesn't matter what company or what a lender does or a loan officer. It's all the same thing. It's like ordering title. Well, if you're a real estate agent and you think that, then you can also leap to really bad conclusions, right? And obviously they think that. I mean, Tom Ferry said it, which he's a super bright dude, and that's somebody whose brain was not connected to his lips when he was talking at that moment, right? And he's a super bright dude, but you might be a real estate agent going, heck, I control the client. The client is coming to me, right? The client is in my net. I should monetize that and just get a mortgage, which is the easiest thing in the whole world, and do the mortgage myself and get paid. And so that's what real estate agents are starting to think right now. Okay, as a buyer's agent, my business is dropping. I might lose as much as 1% of my commission, or a third of my commissions, from 3 to 2, or whatever I charge. But no worries, the client loves me, and I'll just do the mortgage because I control the client. And as Tom tells me, it's like breathing. It's as simple as breathing. And so these agents really have that idea. And so agents are, actively going, where can I do mortgages? Now, dual licensing, which is being licensed as a real estate agent and as a loan officer, has been around since I've been in the business. It comes and goes in different waves. As we get into harder markets, it comes back into vogue, and then we get boom markets, it goes away. I personally never supported it. I've always been against it, which doesn't mean I'm right, but I just think the consumer is better served by two professionals. If you have an outstanding real estate agent, an outstanding loan officer, that home buyer is best served. And I have no idea how a real estate agent that needs to go knock on 1,000 houses to go find a home for a home buyer in a market where there's no listing. I have no idea how they're going to become educated on loan products. And similarly, for a loan officer who has to stay on top of all their guidelines, stay up on top of compliance or compliance classes, has to give the ultimate service to their clients, I don't know how they have time to go knock on 1,000 doors to go find a house for their home buyer, their buyer to buy. Like that just seems, that doesn't serve the home buyer's best interest. But in this case, unfortunately, and the reason why our industries are suffering is because salespeople aren't putting their clients' interests first. They're putting their own self-interest first. And that's unfortunate, and that's why I don't stand for it. But whether I stand for it or not, it's coming. It's coming. I know it's already here, and I know there's companies that do it, and let's say do it well. I don't know. The companies that do it, I know that PRMG has the bulk of their growth has come through this platform of them allowing dual licensing, and they have an interesting setup. And all this I'm talking about because this morning I read this article, The Calm Before the Storm, Preparing for the NAR Settlement Impact with Dual Licensing. Now, I try to put a link in this on my Facebook post here, so hopefully you can find it. I also pulled up an article from a couple months ago, The Double-Edged Sword of Dual Licensing. And the idea is that agents are getting an appetite to try to augment their commissions by doing dual licensing. And so companies are starting to explore it. Now, here's what's really interesting. This is such a, we're in the messy middle. I love that topic. We're in the messy middle, and this is of the post-NAR settlement. So a brokerage, a real estate brokerage goes, I need more money because I can't make money, so I'm going to add a mortgage platform, and I want all the revenue to help offset. But the real estate agent goes, screw you, I'm going to get dual licensed, and I'm going to go get my own MLO license, and I'm going to partner with a company like Realfinity that will let me do both. Right? I can hold my license one place and do loans. So now the brokerage and the real estate brokerage and the real estate agent are at odds because they're both competing to try to monetize the mortgage. And the real estate agent goes, gosh, the fish is already in my, it's already in my net. I'm just going to monetize one more part of it. And mortgages are like air. I'll just send it to Realfinity and it'll be great. It'll be no problems. It'll be a really wonderful world. But what happens is mortgage companies then, and I'm telling you, every large mortgage company has taken this to their lab to see how they can do this. Doesn't mean they're going to do it, but every large mortgage company has 100% had their brain trust figuring out can they bring real estate agents onto their platform and how do they do it, and have created a blueprint. Now they may or may not do it, but you're going to see large mortgage companies start to invite real estate agents onto their platform to do mortgages, right? So now you got a problem because now you have mortgage companies that are going to compete with real estate companies for the real estate agents, which I don't think is going to be a healthy thing for real estate companies, right? So by opening this Pandora's box, you're bringing competitors you don't want. So the real estate company has already alienated the real estate agent and they're competing. And now mortgage companies that have a lot more money than real estate companies, right, are coming into the mix and going, you know what? Maybe we should just add a real estate platform. Or maybe we should figure out how to accommodate real estate agents to do both mortgages and real estate. And I'm telling you, most of the big companies have a blueprint already. Like I said, they may not use it or not, but they are certainly considering it, and they're really seeing who's going to go in. Now, as we know, Rocket tried this, and a few months ago, they closed down their dual agency program. But I have a few folks I know at Rocket who tell me it may come back. They were just too early to market. They learned a little bit. They're going to tinker with it, and they're going to bring it back to market, right? So you're going to have these big players. You're going to have big top 5 companies roll this opportunity out. Now, here's what's really interesting about this. This is also fascinating. I've talked to quite a few C-suite mortgage folks about, hey, are you going to offer dual agency? And they're like, yeah, we're probably going to offer it so agents, can bring loans and get paid on them. Now it's very complicated because there's compliance and there's a lot of legal issues and there's how do you pay, are they contract, are they W-2? If they're 1099, can they be 1099 but your regular loan officers are W-2? Like there's all sorts of challenges like that you got to kind of figure out, and there's cultural problems inside your company. But here's the interesting part. These mortgage companies are considering inviting real estate agents to do mortgages on their platform, but they don't want to allow their loan officers to do real estate. Really interesting. Why? Because everybody's into their best interest, right? The mortgage company is trying to get more business for its company, right? Allowing real estate agents to do mortgages on your platform is just a different funnel, right? And so the agents bring you the business, and that's good for the company. Is that good for the loan officer? Heck no, right? Then my company, my mortgage company now becomes my competitor. I'm a loan officer out beating the street trying to get relationships, and lo and behold, my company leapfrogs me and say, hey, agent, just bring me your deals, right? Now, I don't like my company, right? Then that's a problem. So I'm a loan officer. I say, screw you, company. I want to do real estate. And the mortgage company goes, oh, I'm sorry, we can't allow that. The loan officers go, what the hell is the difference? You're allowing real estate agents to do loans. Why aren't you allowing your loan officers to do real estate? And that's the last thing a mortgage company wants, right? And here's the challenge, right? So and this is what's great. Real estate agents say, hey, loan officers, you don't want to do real estate because I'll stop using you. That really makes sense, right? Because if a loan officer starts, doing real estate, they become a competitor to the real estate agent, and so the real estate agent who is sending their best deals to a lender to do for them to get paid on it, and then sending their crap to you, I'll quit using you. Well, that's a great threat, real estate agent. And loan officers, by the way, loan officers are going, gosh, we watched this whole NAR development, and the real estate agents, the industry has told us how unskilled buyers agents are and how most of them shouldn't get paid and how the million of them are going to drop out of the business because they have no skill. Loan officers are going, I feel like I can compete against that. I can probably add more skill than that. I can probably win. And so everybody thinks they can go steal someone else's lunch at no cost. Like it's not going to cost them anything, even though agents are going to be at war with their brokers, loan officers are going to be at war with their companies, real estate companies are going to fight with mortgage companies, and consumers will be harmed. I don't understand it, but what's interesting here, it doesn't matter whether I understand, it doesn't matter whether I support it. People are going to figure it out this time around, and technology helps. People are going to come out with some pretty good ideas. I've heard a bunch of ideas pitched to me. Anywhere from just having in-house buyer services for charge $1,000 to the customer. The whole purpose is just a funnel to get your loan officers transactions. I've heard from that to opening a full-scale brokerage on your mortgage platform. We'll have to see what comes. But if you talk about the new normal, and this is one other thing, I will tell you this, and then we'll wrap this up. The thing about the new normal is try to figure out how to 10x your future versus 2x. And so much of what companies are doing the 2x dance. Like, how do I shrink my expenses just a little bit so I can get a few more basis points of profitability? Or how can I increase my business just a little bit? Or how do I get a few more units so that I get my fixed variable costs into a reasonable amount? I would say now more than ever it's time to throw away 1x, 2x, and go 10x. And it certainly would be a 10x strategy to go offer real estate and mortgage under the same roof. That would definitely be a 10x strategy. It would definitely be a 10x strategy on how to do a hybrid consumer direct distributed retail platform, maybe even with real estate. That would definitely be 10x. Hard, super hard to understand. It would break the mold, but you know what? I'm telling you, there are companies in the lab trying to solve this. So think about it. And that's my thought for the day. That's my new normal. I'm going to be back on tomorrow around this time. And tomorrow, I'm going to give you my thoughts about Scriptapalooza, Dave Savage's and Trust Engine Scriptapalooza from Monday. I've had a chance to listen to it a couple times. I want to share things that are great and share feedback. So if you're interested, join me tomorrow around 7:30. I hope you have a great day. I hope you have a great Thursday. And I look forward to talking to you soon. Thanks. Bye.